Hello there, fairbinaryoptions.com, and this is Sunday. As you can see, markets are going to open something like in a couple of hours, not couple of hours, but a bit later. Anyways, this is Sunday, and we are preparing the road for trading next week, and this is the Euro US dollar. Like the name suggests, we are bullish on the Euro US dollar on the first half, if I may say so, or maybe even for the whole week. And I would like to go and buy calls at early Monday or during the week by the time you have a retracement. And the reason for that is the fact that the move from the highs to the lows here is corrective. Well, it is corrective, you might say, but does this imply that the lows here, I would say these lows, not these lows, the lows here are going to be broken? Well, I would say they are going to be broken eventually, but it is a corrective move. An impulsive move, it implies that the third wave, or at least one wave, needs to be extended. We have no extension for the waves there, and that makes the case that no extension equals no impulsive move. No impulsive move equals a problem here, so a corrective move. However, this move here looks to be impulsive, so I would rather label this one as an ABC, with the B wave being this ABC as being this this flat that ends here to the upside. And I would say that we have a nice ABC out of this degree, and a C to the downside with an impulsive move, but an impulsive move, attention, that ends with the move here. So A, B, C, and then of course we are looking for a rebound. So the logical thing to do is on early Monday morning, or let's say when London starts, let's try to avoid Asia. So when London starts, we are trying to buy calls based on this analysis. So we are looking to buy calls for end of week expiration date, okay? So buying calls with end of week expiration date. And the buying should come when London opens on Monday. So why end of week expiration date? Because actually we are looking for a corrective move to the upside as well. From my point of view, the move that started here is an impulsive move that goes with 5 waves from the highs here on the top there. So from the highs here to the lows here is an impulsive move. So this should be labeled with a 5-wave structure. So we have a 5, and then we have a 3-wave structure for the corrective wave, this to be flat to the upside. So 3, the corrective wave ends all the way here to the top, and then another 5-wave structure. You might say, well, this is not a 5-wave structure. Well, it is a 5-wave structure, and it is an impulsive move to go to the downside if you check the rules of an impulsive move. And there you go, this should be labeled 5, 3, and 5. Well, 5, 3, 5 in my book and in any trading book material implies a zigzag. So the whole move here is a zigzag, and now this zigzag needs to be retraced. Why? Because if this is a corrective move that ends here, this corrective move comes in 3 waves, A, B, C, okay? And these 3 waves need to be retraced at least 38.2. Why at least 38.2? If you take a Fibonacci retracement that you go from the top there and to the lows here, as you can see, 38.2 are 35.14. Now, we are not going to have any important events next week out of Europe. Only the German CPI is going to come, but nevertheless, try to look for the 38.2, as we might have an X wave to the upside. As this move to the downside, the whole move seems to be part of a leg of a contracting triangle of a bigger degree. If this is not a leg of a contracting triangle of a bigger degree, then the retracement should be even higher to 61.8, as 3 waves needs to be retraced for another 3 in order to fall with a fifth, with the 5 waves for a flat. So quite a complicated situation, but I would say this is a win-win situation because price is looking to pierce to the upside, either as an X wave for 38.2, either as a B wave of a bigger degree for 61.8. Basically, we don't care. So as a consequence, we are buying calls with end of week expiration date, and the buying should come when London opens on Monday, end of week being Friday. Bullish scenario, bullish outcome, buying calls. Whenever you buy calls, you look for price at the expiration date to be bigger than the striking price, meaning the price you are buying the option for, and whenever you are buying puts, you are looking for the opposite. Not our case here. We are bullish on the pairs, hence buying calls. Thank you very much for being here. Keep in mind this is fairbinaryoptions.com, and all these recommendations are due to our official sponsor, Lioneye.